All right, guys, I just want to make sure everyone can hear me. Just testing the audio real quick, and then we're going to get going. Okay, perfect. Everyone can hear me. So, hey, guys, my name is James Dainard with Heaton Dainard Real Estate. We are going to be giving a 30-minute presentation about the COVID-19, kind of the impacts on real estate, and kind of what's going on in the local market. I appreciate everyone kind of taking the time to listen to us. So you'll see in your webinar, before we get going, you'll see that there's a questions section. So at any time during the presentation, feel free just to plop questions in that little box if you have them, and I can answer the questions kind of either throughout or at the very end. I'll just kind of answer them all through. So we're going to do a 30-minute presentation and then 30-minute questions and answers, or I'll just stay until people's questions are kind of done for. So we're going to kind of get this going. I got a lot of kind of information to go over in this. So a background of who I am, I've been investing in real estate since 2006. We as in my partner and Will Heaton, started our family companies in the downturn of 2008. The reason we like to kind of point that out is we are used to running real estate businesses in kind of chaotic environments. And right now we're kind of in the middle of a chaotic environment, and also where we built most of our wealth in real estate wasn't over the past 2 to 3 years. It was actually in the downturn of 2008 to 2011. So in 2008 and 2011, we purchased over 150 properties during that time, whether it was a short-term fix and flip or to start building out our rental portfolio. That has grown as the market's improved and things got stabilized. We turned those properties into 350 rental doors in King, Snohomish, and Pierce County. The Heaton Dainard team has specialized for the last 8 years in helping investors package up, renovate, design, and get properties sold, with over 1,700 listings in the Puget Sound region. And then we've done over $1 billion in real estate investment transactions in all different types of markets, whether it's up, down, or flat. So, right now, if you are looking for investments, we are the right team to be working with. We understand market volatility, and we are experienced in all different types of markets. So what we're going to cover is the COVID-19. Obviously, this is something we haven't seen before. We see ups and downs of real estate, and that kind of happens every 10 to 12 years. And honestly, we're at the 12-year mark, so we are due for some sort of correction. The COVID-19 is just kind of adding kind of additional chaos into the mix. So the things that we're going to cover is the economic impact, what's going on with the economy, interest rates, what's this going to do to the fix and flip and the buy and holds with the multifamily investing, what kind of economic relief is being done right now with that $2 trillion package getting passed through, with what's going on with the Federal Reserve assistance and what they're doing to help backstop our economy, and then what the state's doing to also assist us in this time of kind of crisis. And then the last thing we're going to cover is what do we see as opportunities on the rise, right? Like during any kind of market correction, there is always an overcorrection, which is going to create a massive amount of opportunities in the real estate market that investors right now can honestly lock in at lower pricing and low rates, which is really the perfect storm for any kind of investor. So we're going to talk about what do we do with fix and flip properties for the next 6 to 9 months, what buy and holds are going to look like, where the opportunity is at with multifamily, and then what kind of other opportunities if you're a small builder that are coming up with development sites and kind of terms you can get. So we're going to jump kind of right into the local. We're going to talk about local and national impacts, and then kind of our investing strategy. One thing that we want to, before we get into the impact, is just kind of go over general Washington overview. And I think right now, we all know that the nation is heading into some sort of recession. This impact and the amount of government spending that is happening is going to cause some sort of economic, slowdown over the next 12 months. The one good thing that we have as investors, for the local real estate investors, I would say the out-of-state investors probably might want to be a little bit more concerned, but in the local Washington economy, our state has been growing at a tremendous pace. And, the strength that we have is this big business expansion that we have seen over the last 12 to 18 months. These big businesses, you're talking about Google, Apple, Amazon, Microsoft, Expedia, these businesses are not going anywhere. They have had a ton of plans in motion, whether it's, securing a ton of real estate to expand out their offices, purchasing real estate to expand out the offices. These plans are already in motion, and jobs are still going to be coming to our market, whether we go into a recession or not. One also strength that we have in the current conditions that we're in is a lot of our tenants, at least myself and Will's tenants in Seattle neighborhoods, are tech employees. These people have been working remote from their offices, and they can still be employed, they can still get their jobs done, and they can still pay rent and kind of support the economy. So, luckily in Washington, a lot of our workforce, at least in the Seattle market, is kind of tech companies. I know down in Pierce County, South King County, those kind of jobs are a little bit different down there. So, we're expecting a little bit of a weakness in maybe that rental market. But in the core Seattle neighborhoods and the east side markets, we're thinking that there's still going to be a very strong outlook on the economy, and that we're going to keep things going forward. And the one thing we know is these large businesses that are rapidly expanding in Seattle are not going anywhere. They're not going out of business. I mean, the biggest company that we have at risk right now is Boeing. Just what's going on with the airline industry, the demand for planes, and then also just with their MAX issue over the last 24 months. But the government is stepping in for our local big businesses to make sure that these companies survive, which will keep our local economy in better shape than I think the nation will see. Our local real estate strength is, right before the shutdown, there was very little inventory in the market. We were actually less than a month, and literally within hours of it being totally shut down, I know our brokerage was still going mutual with properties, and we had every listing under $1 million pending, and they all went pending quickly and above list. And this is during the last couple of weeks of this COVID-19 crisis. So even though there is a crisis going on, supply and demand always wins. And right now there's a high demand for housing with the amount of job growth, and that the inventory is very low. And so we're thinking after everything gets opened up that it will just kind of continue on that same path that we were on. The other local real estate strength that we have is as jobs are expanding in this market, interest rates are going to remain low for the next 9 to 12 months. They're starting to settle down right now. And the affordability of houses versus wages is still reasonable. I hear all the time, Seattle's getting expensive. It's too expensive. But if you look at what the core buying pool is in Seattle or in different types of market, if you really look at what they make on income basis, the pricing, owning a home is still much more affordable than renting a property. And so it makes sense to buy. There's still a ton of relocation buyers in our market that actually are not able to buy right now, and that there's going to be a backlog of buyers in the market. And then the real estate values are still relatively low for what the income for buyers are. So, there's a lot of strength inside of our local market that I don't think we're going to have the same impact as some of the other markets outside of Washington could have over the next 12 months. So what's the impacts from this COVID-19? We're going to go over just a quick bullet point of what our big impacts to the real estate community are. First one is the shelter-in-place order. That is, that went into effect, I think, last night at midnight. So we're going to cover what that is and what that's going to do to our impact. The non-essential businesses are closed, as most people know. That is, shutting down companies just like, Heaton Dainard itself. We are not allowed to operate at our office. People need to work from home. So the non-essential businesses are closed for the next 2 weeks. Unemployment is spiking right now. Obviously, with jobs and non-essential businesses closed, companies are having to lay people off, which is very unfortunate. We're hoping that it's a short-term thing. Right now, there is some lending restraints. I'm sure a lot of investors know, the COVID-19 has caused a lot of hard money lenders to stop funding deals right now. One thing I do want to point out is interest funding is funding Heaton Dainard local internalized deals. So as of right now, if you are looking to get in the market, we do have financing on our deal flow that's coming out. And then there has been a lot of local job loss, which ties in with unemployment. And then one thing that did come into effect is evictions. There's a 60-day ban to kind of help people in this crisis, which I do understand, as people with low-paying jobs are getting laid off, they don't have any income coming in right now. The state has kind of stepped in to make sure that we as landowners or landlord owners, don't send people out into the streets. And one thing we'll talk about that a little bit more, but things that you can be doing as a landlord is reaching out to your tenants and being in constant communication with them to make sure that you might be able to soften the blow of that and really work with people. If people are in a hard time, try to work with them. It's going to help put you in a better situation. It's going to put them in a better situation. And then, you might get less tenants not paying rent right now. And then right now we're going to dive into the shelter-in-place order because this is a big deal that will be in effect till April 7th. So what this shelter-in-place order is, and these are the major impacts. There's a lot of things in the shelter-in-place order. I highly encourage everyone to read through it, figure out really what's essential, what's not essential, kind of what the protocol is for all people in Washington. But the things that we feel impact real estate the most are construction projects. Non-essential construction projects will be on hold. So what that means is as far as we know from, we've talked to the Master Builders Association, according to Jay Inslee, what he is kind of putting into play is anything that is residential construction that is not structural or life endangering is not an essential construction project. Okay, so what that means is if you have a cosmetic renovation going on right now, you do need to stop working on your project. I know this is unfortunate for a lot of people, but you guys take a step back and remember that we are all contributing to this problem and we're all contributing to this solution. We have a 2-week period where we all can sit tight for a minute, let this kind of play out, let's flatten the curve and just kind of be good members of society. I know some people are talking to me about still working on projects. My personal belief is just hang tight. Now, what is not included in this construction project is any kind of structural work that needs to be completed. That is deemed essential. So if you are in the middle right now, we do have clients in some fairly large projects, including myself, where we're actually pouring foundations right now on a project and retaining walls are being inspected. Okay. We just did an inspection yesterday with the city of Seattle. They are limited on inspections right now. They sent out an inspector. They actually FaceTimed the whole inspection to the main structural inspector, and that's actually how we got signed off on our retaining walls. They have approved us to pour the rest of our structural work, and then at that point, we are out of the job site. So you are allowed to do anything that can work on anything that is structural or integrity. So if you do have any foundation stuff going on, any kind of major framing, check with your local city, but you should be able to work on those things. Building inspections. Again, check with whatever your project is located in, wherever it's located in, check with that local building department and see what they're doing as far as structural inspections go and kind of what their expectations are. Every city, there is one big shelter-in-place order, but every city is interpreting it a little bit different. So it's really important that you communicate directly with that department. Don't just go under the pretense of what the order is. On the Northwest MLS, this is another big thing. Right now we are not anticipating a lot of sales for the next 2 weeks. Everything was selling prior to this order going in. So as of right now, all activities in real estate, showing properties, dropping lock boxes, going out and taking a look at properties, those are deemed non-essential, and real estate brokers are not supposed to be doing those. Activities on mutually accepted properties are deemed essential. So that means, like right now, we have 17 pending properties on the market. Appraisers are still allowed to go appraise. Home inspectors are still allowed to do their home inspections, even though some are not opting for to do it. So, buyers need to reach out and kind of go through and get the right inspector in there. And, and closings are allowed to still be closed out. That is an essential service. They do want closings to kind of close. So, talk to your broker, figure out where things are at. And then if you do have a pending sale, there has been delays because of this COVID crisis on loan docs getting out. There's also been a massive refi boom. So things are a little backed up right now. Appraisals are coming in longer, or appraisers aren't hitting their times. So you have to be flexible with your buyers right now. And, you'll see an addendum going out. And, I know at Heaton Dainard, we've been using this addendum, and most buyers are too, where it's a COVID-19 form an addendum that allows buyers to be more flexible with their timelines, and what it basically does is allows the buyers to not be accountable for loss of days and times if it's caused by the COVID-19 process. So you guys, as sellers, you got to be patient, keep the deal together. Things will close. Stay in constant communication with whatever broker you're working with, and just kind of keep things going along. I know on all of our closings, we're just constantly checking, hey, our loan doc's in, or what's the sol up, and I do believe the squeaky wheel gets things done. It gets things done. So just constantly check in on things, but keep your patience on it. And then one thing that is kind of a concern is some of the the recording offices are closed to the public, but they are doing remote closings. Some have switched, like Oak Harbor, Washington, have switched to limited hours. So this could cause delays in closings. So just be prepared for it, right? And you guys, there's not a whole lot anybody can do, but get all the closing docs signed, get it all signed around, send it in, and then you gotta be patient with the recorder's office. So just kind of keep your cool and let things kind of play the way it's supposed to play out. So economic relief is kind of coming our way, and you guys, I'm going to talk about economic relief in a couple different ways. The reason it's so important is because, right now, the COVID-19 is causing all the difficulties, right? It's causing fear in the market. It's getting people sick. It's causing things to shut down. But really what we're going to see is the impact of the COVID-19 is really going to come into effect in about 9 to 12 months. Right, when the financials of these businesses start coming out. And so the good thing is our federal and local governments are assisting us to help keep things moving forward. So in the state of Washington, evictions are suspended for non-payment for 30 days. That was from the state of Washington. Now with the federal order, it's up to 60 days. On unemployment, if you have to lay somebody off or you've been laid off, the state has waived the 1 week waiting period for unemployment, so people can get cash in their hands immediately. State funding, the state outside the federal package has increased $5 million of government strategic funds that are available for small business grants. That is not included in the business grants that are coming through the federal government. So the state is also chipping in. Taxes. One thing, you guys, if your taxes are due and you don't want to pay them right now because you might be in a cash crunch, upon request, the department will provide extensions for paying tax returns in your taxes. So you have to get the request in, but they will give you some variance on those taxes. And then workforce flexibility, just things that we've seen just from our big businesses. Thankfully, I know some big businesses get bad, like, big businesses are taking over the small business, but you guys, thankfully, we have this big business growth in Seattle because, one thing that has been very nice is they are allowing people to work from home, and they're being flexible, and they're keeping people employed. So now that we went over the state, we're going to talk about national real quick, and then we're going to kind of get into the investing strategies. So what has happened nationally since this crisis has really broken out over the last 3 weeks? Well, the stock market's down nearly 30%, right? So 30% of people's wealth and cash have been evaporated in the last 3 weeks. The one thing that, 3 to 4 weeks, the one thing about the stock market, it always goes ups and downs, guys. And so what we saw, and part of the reason there was such a huge drop is, as the press gets a hold of this COVID-19 crisis, and it starts to get just a whirlwind of opinions that happens, and people freak out and they do a grab on cash. And they're pulling money out of the stock market, they're pulling money out of banks into cash at a record amount, and it kind of sent our market into a spiral for a 3-week period. The nice thing that's going on right now is that the stock market's kind of leveling out to getting to be less rational. Over the last 3 days, we saw a huge rebound back out, and then we're hoping that it just kind of stays flat for a little while with ups and downs and variances. No matter what, you guys, as the news come out, the stock is going to be a volatile market. Things are going to go up, and things are going to go down. So if you are investing in the stock market, I am not a stockbroker. I would highly encourage you to talk to somebody that knows exactly what they're doing in that market, and kind of reposition your cash. If you have a low stomach for ups and downs, I would say you might want to stay clear from the stock market right now. Unemployment is up 3.3 million in filings in 1 week. That is a record-breaking amount. We've never seen that many people file for unemployment at one time. The good thing is the government passed a stimulus package that is going to take care of those people, right? We're trying to bridge through this tough time right now. Lending. We have seen an increase in rates because of the volatility, like I was just talking about, as people pull out all their cash. When a bunch of investors have reached out to me, they're like, I don't understand why rates are going up, the Fed's at zero. Or even some of the public has going, oh, well, rates are low because the Fed has the rate at zero. That doesn't mean that rates are going to stay that low. We're seeing an increase in rate because there's a limited, because the bond market got sold off very quickly. We'll talk about that a little bit more in the next slide. And then there's been just so much volatility, it's thrown the rates out of line. Also, right now, locally and nationally, we're seeing limited short-term capital available. And what that is, you guys, over the last 12 to 18 months, we've seen a lot of lenders kind of storm into the market of Seattle. We've seen a lot of lenders say they'll do the loan, and then the loan falls apart last minute, right? That's happened to tons of investors locally. And the reason being is these are not true hard money short-term bridge lenders. These are major banks that are really masking themselves as hard money lenders and providing financing because the economy was doing so well. One thing is when the economy shifts in any way, shape, or form, these big businesses pull back dramatically. They do not want to be lending money statewide and nationwide with little control on that. They don't know the markets as good. It's higher risk for them. And so we've seen a massive pullback in lenders not funding right now. Now, again, you guys, I want to point out that interest funding is funding loans for internal Heaton Dainard deals. So if you do need capital, reach out to your Heaton Dainard broker. We can kind of pair you up with the right investment with it. The other impact that we've seen is the government is having to spend massive amounts of money and pour it into our economy. And they just passed a $2 trillion package we're going to go over. The government itself is going to be hemorrhaging money, which is going to have some negative impacts down the road. And then interest rate volatility, which we talked about. So why is there volatility in the rates? Well, there's volatility in the rates over the last 3 weeks because the Treasury bonds have rose. They went from 0.75 point to 0.84. Usually mortgage rates follow the same Treasury bond yields. Now, that's getting under control. We'll talk about that in a second. But so the bond market yield went up. People are selling off their bonds. They're not buying up bonds at the same time. So what it did is it threw our mortgage rates into a little bit of volatility, and we're starting to see them kind of level out right now. Demand, you guys, in March alone, refinances spiked 79%. Banks couldn't even fund these deals if they wanted to. They're so backlogged up. So we have a really backlogged pipeline of refinances, and then we have bonds that are going up, and people aren't buying the bonds, and so it's causing our rates to be a little whacked out. And a couple other little things that can cause volatility in rates. Oil prices are on the move. That can cause fluctuation in the rates. It also cause inflation. And then someone had pointed out to me that the greed index. When investors see the opportunity, right, as the stock market crashed, people did see opportunity in that. I'm actually one of them. I bought stocks and sold stocks real quickly, and it worked out for me. Not that I have any idea what I'm doing, but you'll see people they moved from bonds to stocks as they were trying to buy stocks on the low, which it caused our bond market to get whacked out. Okay. So what is good for rates that is coming down the pipeline that is going to level things out? Because I am a true believer that interest rates really push the demand in real estate across the board. So federal assistance has cut rates to zero. That's a positive. They are looking that interest rates could go negative in the next 3 to 6 months, which would be the first time in history for us. Gold prices are going up. That's a good sign. That usually means that they usually correlate to where that will bring rates down. Government assistance. So the government has stepped in, and they have committed, or the Federal Reserve has committed, to buy as many bonds as needed to keep things going and to keep rates low. So it is the government's priority to keep interest rates low right now. And then also the Federal Reserve this week committed to buying unlimited amounts of bonds to keep the market stable. This originally had a cap of $200 billion, and now there's no limit on that. So the federal government's going to do whatever they can to keep the rates low, which is going to keep real estate locally in Seattle a lot healthier than what it could be anticipated to be. So federal financial assistance. We're going to go through this real quick, you guys. One thing I think everyone should read the stimulus package, see what you kind of what's available for you as an individual, as a business. Just see what you can kind of utilize that for. So in the federal relief, so Fed-backed mortgage protected. So on foreclosures on federal-backed mortgages are protected up to 180 days. So we are going to see a very low sell. There's going to be very low foreclosure sales in the next 180 days. You could see some people wanting to get out of properties kind of ahead of time, or what we're going to see is a lower amount of sales that could lead to a backlog of foreclosures coming down the pipe in the next 6 months. Forbearances. 90-day forbearance plans on federally backed loans are available right now. So you need to, and this is included in single family and multifamily properties. So as an investor, if you are going to be running into any kind of income trouble because your tenants can't pay you rent, you need to reach out to your lenders and look into this forbearance plan and get this kind of going, because that could save you 3 months of negatives on your cash flow. They also have possible 12-month options for owner-occupied properties as well. So, if some people are thinking that it's going to spike the foreclosures, this economic downturn could actually, a lot of people are living beyond their means, so it could have some defaults going on. But for people that can afford their homes and that were not over leveraged and just got laid off, there's a lot of options that are going to keep foreclosures low, because they can actually get these 12-month forbearance plans. Direct payments, $1,200 per adult, $500 per kid, with some restrictions in there. There's tenant assistance. You cannot evict tenants for up to a 100-day period just on non-payment alone. Also, one thing we wanted to point out is you're not able to charge any late fees or penalties during this time. So if someone can't pay you rent for 120 days, it is only for the rent amount. The Treasury has granted $500 billion in loans for investment period to help keep the economy afloat. Unemployment has increased $600 per week on top of state benefits for 13, and they've extended by 13 weeks. Some other economic relief that are kind of coming our way, and you guys, these are all good things to help keep our economy afloat. The IRS says individuals and businesses can delay filings for paying their federal tax bill for 90 days. So it's going from April 15th to July 15th. The Federal Reserve announced measures on Monday to backstop all credit markets in the United States economy without limits to committing to buy corporate bonds. Student loans, and this is big for any kind of people with student housing or, just any your kind of low, your lower income rental properties, maybe your rents that are $1,400 to $1,500 a month that are student housing, people that are working in restaurants and bars that have been laid off. Students' federal loans can be suspended until October. So the government is reducing people's expenses, which can also help keep rent income coming in right now. And then the SBA has a $350 billion loan program to cover monthly expenses like payroll, rent, utilities. So these are, if you are running your business and you're having to lay some people off right now because you can't work, then there is loan programs that is forgivable debt that you can capitalize on to keep your business going. So now that we've kind of gone through, I wanted to kind of go through, what the problems we see in the market, what the solutions, and what the governments the government is stepping in to do to help kind of fix these situations. And you guys, the government is really, we've never seen a $2 trillion package get passed. So they're pulling out all the stops to make sure that this is a short-term, painful situation, and that we don't go into some sort of spiral. So we're going to talk about, now that this has happened, right, and things happen in life, right? Markets go up, they go down. Banking, there was a banking crisis 12 years ago. Now we have this pandemic, which could cause an economic crash, right? So things are kind of coming. This is normal for any kind of real estate platform. Ups and downs, major events happen, and as an investor, You have to prepare and change with those conditions, and that's how you actually maximize out your potential as an investor. You know, I've talked to a few people like, oh, what do you think I should do right now? And it really comes down to what is your preference and what is your stomach for investing. What we have done, where myself and my business partner, Will, have made all of our wealth isn't buying in the last 3 months or 3 years of real estate. We made all of our wealth in real estate buying in a down market, because when any kind of market correction comes, there is always an overcorrection. Fear drives, people freak out and they dump stuff off, right? And this is not us being investors looking for opportunities to kind of jump on them and beat people up on pricing. This is buying the product that's available in the current market conditions. And right now, with the overcorrection, I think, as you see people pulling out money out of the stock market, they're selling their stocks at losses, they're pulling cash out. People are also going to try to dump off some of the real estate assets. They want to just get into cash. It gives them peace of mind. They don't care about the return. And then that's where the opportunity is for people that don't really have the stomach for this, are going to exit the market or sell off assets to kind of just get into cash reserves. And that creates lower pricing for us, more opportunities, and allowing us to also take advantage of these low interest rates and government spending that's going to keep the economy kind of flatlined out. So we're coming into the perfect storm to where we can buy low and get debt cheap. Okay, so we're going to talk about kind of what we're seeing in the next, 6 to 12 months. So the trends in sales. We believe that the market is going to continue after the COVID-19 is stabilized, right? The reason we believe this isn't just on what we're reading or what people's opinions are. Is I am basing this based on our sole experience of what was going on prior to the shutdown. As this the COVID-19 has been going around now for 2 months in Seattle. We have seen very, very little impact during that time to the actual real estate market. Everything was selling, even when it was, as people unfortunately were starting to get sick and people were really starting to get hospitalized, the market was still accelerating at a rapid pace. And even after we saw government shutdowns and more, worse news about this, homes were still selling for list price, if not above. And the reason being is there's low demand and cheap money, right? And we have a massive amount of relocated buyers right now. So we don't think that the trends of the sales are going to change much from what the pace was right prior to the shutdown. And once April 7th comes around, it's going to open back up and buyers are going to get back in the market. I mean, if anything, people do want to get out. There's a lot of people in small apartments right now that are under quarantine that want to get out of that apartment, and they want to get into that next step in their life. Or as they get into economic uncertainty, they want to get settled into the place that they're going to settle in for the next 2 to 5 years. So I don't see sales kind of falling off right now. And right now, there also is a backlog group of buyers. We also shut the market down in real estate for 2 weeks during the hottest frenzy time of the year. Spring sells. There's buyers still looking that still want to get into the market as long as rates stay low. Rental absorption rate. I actually think that the rental absorption rate is going to also increase as well, because once this all kind of blows through, there's a ton of people that were already planning on moving. They got trapped in this whole scenario, and they want to get out of the area that they're in, and they were already looking. Right prior to us shutting things down, we were leasing up tons of units. People were still moving. They were still living their lives. They wanted to get settled into their place, lock in their lease, so they kind of had it off their plate. So as we go into economic uncertainty, people want certainty in their life, which is getting settled in where they're supposed to be next to their job. So we do think that rentals are going to continue to lease up pretty quickly. The sales absorption rate. I do think, for the first, once the markets free up and we start to see this settled, you're going to see a cautious increase, right? People only go off what they last remembered. They don't think, Seattle has low inventory, rates are low, I need to buy now. That was what was fueling sales over the last 6 months. They're going to go in with a cautious approach, saying, what's going on with the economy? It's going to take a month or two to kind of get fired up again. But then once that starts going, we're going to see everything sell off just like a normal real estate market. I do believe it's still going to be a seller's market. For us to switch into a buyer's market, according to all definitions and experiences over the last 30 years, we have to have over 5 months of inventory in the market. We were sitting at under a month's worth of inventory right before the shutdown. So we would need the amount of inventory to increase by 400% to get us to that buyer's market. So we're still going to look good as sellers. We just might need to be a little patient. And then demand, there's still a ton of pent-up demand in the market for relocating buyers. The reason we think things are going to be good is interest rates will remain low. The government is doing whatever they can to keep them low, even possibly going into negative interest rates. The local economy, big tech businesses are going to continue to hire and rehire employees. Okay, these companies have game plans going, and they're planning on building out Seattle right now. This plan is not going to stop. This was not a 12-month plan for them anyways. They have plans that are 2 to 5 year plans. So that's really going to keep our local economy afloat, whereas honestly, some other sub-economies could really start to suffer over the next 12 to 24 months. I think a lot of economies in California are going to do so just because the tax basis, they're not very business friendly. Companies were already on the path of leaving that area. So those areas could be more affected than our local economy right now. We could see some possible inflation. The combination of government funding and low rates could cause inflation. And you guys, real estate is one of the best assets you can own if we're going into a time of inflation. So again, we are going into cheaper pricing, low interest rates, and a hedge against inflation. And you guys, we have a really good 6-month window where people are going to be a little bit freaked out to start buying things. I think there's definitely signs of a possible recession coming up. I mean, we can't shut the whole economy down for a couple months at a time, or partially shut it down and not have repercussions. Luckily for us, I think recession nationwide is definitely going to happen. I think we're going to have less impacts in our local economy. Again, thank God for the big businesses that are already kind of in play right now. So what are the opportunities on a rise? So right now, what we see is big opportunities coming into the market are, one is fear-based investors. You guys, again, where me and Will made all of our wealth was buying in 2008, 9, and 10. That's because there was nobody out there really to buy stuff. Rates, and you guys, we were buying stuff and made our wealth where rates were at 7% and really hard to get a loan. So right now what we're going to see an overcorrection for the next 3 to 6 months. It is time, if you can lock in the right price and have the right interest rate load up, that asset is going to outperform most other assets that you can buy right now, whether it's stock market, gold, on a 2 to 5 year basis, because of the perfect storm that you can buy things on right now. So there's other condition drivers too that are going to drive pricing down. Limited short-term capital. Again, we are funding transactions through our office right now, but the limited amount of capital in the market, financing drives everything. And if investors can't access short-term capital, that's going to make things less competitive. Less competition means cheaper pricing. So, right now, we are expecting to see a surge in opportunities kind of coming our way. There's high return cash flow rentals out there. As things kind of level out, we just got a deal under contract in Tacoma. It's like $155,000. That same house about 45 days ago was selling for $175 because the flip market was going so crazy. And at $155, this thing locks in at where you can leave very little money in the deal and you can cash flow over 10%, right? So as we're seeing pricing come down, that sub 200 rentals are going to be very high cash flow rentals. So, there's better discounts. There's more Burr method opportunities available, and it really allows you to buy low and refinancing at low rates. Value add multifamily. You guys, the commercial lending business, lending on units 5 units above has definitely tightened up right now. That's going to eliminate a lot of, traditional investors looking to buy these multifamily buildings. And because there was such a low demand, a lot of traditional investors were buying bigger fixer ones than they really knew what they were actually buying. And they were kind of getting themselves into kind of harder situations. And the reason they were doing it is because there was really not a whole lot of supply or anything out there good in the market with a return. So as this bank financing, commercial banks have tightened things up because, what commercial banks lend on is a debt service ratio, right? Or the DCR. So what kind of income are you collecting now is what they're going to kind of judge their loan on. If some of these buildings for sale have tenants not paying them rent right now, the lending limits are going to drop on that, and people are going to have harder times finding financing for that kind of product. So this is a prime time to pick up big equity positions in core neighborhoods of, Tacoma, Seattle, Everett, to where you can really pick these things up because they might be a little bit deferred right now, and buy them at much lower pricing with some bridge hard money or soft money financing. Get it stabilized, and by the time you're done remodeling, kind of stabilizing this building, you're going to actually be ready to refinance this building in a time where the lending rates are going to kind of loosen up, right? Because the commercial rates are going to come back as things start to stabilize, or they know people are making the rent payments. So it's kind of the perfect time to do that right now. If you're buying, we got a client buying one in Fremont right now, which he got a very good deal on because of the timing in the market. She has to turn over 6 units cosmetically. So over the next 6 months, as the banking market starts to loosen up for the next 6 months, she's going to be able to get this property stabilized, rent it out again, and then obtain cheap financing on a core location building with cheap pricing. So it's a good time to get those massive equity plays in apartments if you have the liquidity to do so. And then, the other thing that is an opportunity for us is anything, if you can qualify for any kind of financing, you want to get qualified now, because the federal backing of interest rates are going to keep rates low, and it's going to give you a ton of versatility in buying and maximizing out investment properties. So opportunities on the rise, types of products that we're seeing that we think that investors should be looking at and that we're actively looking at ourselves. Here's a quote right here from Warren Buffett, and this quote always nails it for me. Be fearful when there is greed, and be greedy when there is fear, right? Right now we are going, over the last 6 months, all I heard from investors like, oh, there's not that many good deals out there. Well, now the good deals are here and the financing's available. It is the time to lock in a bunch of holding properties if the numbers make sense to you, right? Set your buy box, and as long as the things are hitting your buy box, and if we are going into some kind of recession and you're making a 10% return on your real estate owned asset, that is, a 10% return in times of recession is what you want to set yourself up with. It can be extremely difficult to get a 10% return if we really do go into a tough economic recession. So types of products that we're looking at: value add multifamily, which I just talked about, stabilize while the economy recovers, right? The time that you're not going to really be getting rent right now, you won't be getting it now with the COVID-19, or it's going to be partial rent. On a value add, you wouldn't be getting it anyways, right? You got to stabilize the property, renovate it, get it fixed up. So it's a perfect time to where people will sell things off cheaper because they're not getting the income. You wouldn't get it anyways, and then you can maximize lending later. Flip projects. If you want to do lower risk types of flips, when you're checking at any kind of opportunity, look at what rents are versus mortgage costs. A lot of South King County, Pierce County, Snohomish County, and even parts of North Seattle and North King, the rents have climbed up so high that that mortgage costs is actually cheaper. It's cheaper to own, and you're maximizing out a rate than it is to rent. So in any time that happens, the market always remains strong, and that's why we've seen such a rapid appreciation in those same type of markets over the last 6 months. So these are very safe flip projects to get in, because at the end of the day, if you buy a flip and if for some reason it's not going well, but you had some good upside in it, you can still refinance that asset and pay for it and cover its mortgage costs. Prime locations. You guys, in a market where there's a low supply, location always sells. Novelty, location, things next to expanding areas like transit and tech expansion, those areas are still going to do well, right? Like tech expansion, these businesses are still building out these jobs for the next 2 to 5 years. There are people coming into the market. So as long as you're looking at your core locations and know that the demand's there, which, prime location and novelty is usually how you get there, that's going to be a good asset for you to be buying and selling. So anything with novelty and those good core Seattle neighborhoods, core North Tacoma areas, those will sell well. Single family homes right now, as we're seeing a market correction, the BRRRR opportunities are rampant. So you're going to be able to buy a lot of single family, low maintenance assets that you can clean up, get refied, and leave low cash in the deal. That's all I've heard for the last 6 months from investors. I want to find deals I can leave no money in them and get low interest rates right now, capitalize on the interest rates. The time is now to do that. Student housing, as you're looking for more kind of different types of product, student housing is a good way to hedge against any kind of economic downturn. Because if you are buying housing for students with kind of set rates, they're usually typical rates that are paid for by government assistance, government loans. That is a very stable rental market for you to be in, whether jobs are coming up and down. Students still have the same fixed income throughout this process via loans. So they don't need cheaper rent because they're used to paying that rent. They don't have to worry about that job that's going to lay them off. So student housing is a very safe way to kind of get a good cash flow, solid product that you can kind of work off of. And then resale values that are affordable to the masses in geographical locations. Areas like North Seattle, Beacon Hill, parts of Hillman City, South Snohomish, those areas where they're close to big tech jobs, but the average resale price is still around 5 to 6, anywhere between $475 and $695. The cost to own that home is still cheap, and it's still within with the median, or what people's salaries are. I mean, if you're buying a $400,000 house, your payment's roughly going to be around $2,200 a month with a down payment in there. So $2,200 a month for an Amazon employee that's making $100,000 or $120,000 a year, that's still 22% of what their income is. Okay, if you're looking at what the disposition cost is, look at what if their mortgage payment is at 35% or lower than what the expected income buyer is for your specific asset, you're going to be very safe on that resale. And then a good way to hedge against any kind of risk is light fix-ups, right? Get in and out of the market quickly. If you're buying light fixers that might be a little bit slimmer returns, you can get in and out of projects. It limits your market exposure to where you can get in, stabilize it, sell it. Typically, housing is not going to drop by 10 to 15% in a month. So you have time to kind of get in and out of the market without taking any kind of hit. That's actually how we used to flip properties back in 2008 when the market was crashing. We would do flips that were on average, about 4 to 6 weeks on construction. We put them on the market. They'd be on market for about 30 days and get in and out of them in about 120 days to 140 days in general. The reason we did that is because the market was dropping literally 5% a month in certain neighborhoods. So our goal was to throw a little lower ARV on it and then watch the market catch up to it. And it worked very, very well for us. But we had to be in and out of these projects really, really quickly and not be in a long market exposure. And then don't be weird. Don't buy weird assets right now. You want to appeal to the masses, right? If it's weird, make sure it's super cheap. If you have some weird stuff, you might want to sell it right now and kind of get it gone why rates are so low. And so, if you are looking at investing in real estate, how do you minimize your risk, right? There is risk to everything that you buy and invest in, whether it's stocks, housing, gold, bonds. There is risk that come with those assets. So as an investor, you have to look at how do I minimize my risk all the way across the board on each thing that you are looking to invest in. We can help you with the real estate side, but things that we're telling people that they should do as they're looking at getting into this market is make sure that you can qualify for bank financing. That is key, right? Because if there is an economic downturn in 6 to 9 months for whatever reason, and you bought a really good deal, you don't want to sell that deal off before you actually realize the potential of that deal. Make sure, you could be buying a flip and you could be buying it for 175, targeting 300, and then we might get a little shaky in the economy. You can refinance that property and still get most of your cash out and cash flow it strong. And then if we're going into a recession, you have an asset that is now backed by real estate that is providing you with monthly cash flow that's typically going to be higher than what you can get in the stock market on times of recession. And it gets you a very good income producing asset in a time where you need it in times of recession. So set up your buy box. What defines your buy box and why? Why are you looking at buying the things you are? What is defining what you're going to buy? We can give you guidance on that. And if you need some more guidance, please reach out to your local broker, whether it's a Heaton Dainard broker or the broker you work with. Define that buy box and stick to it, right? This is the time where you can set up your portfolio for the next 2 to 4 years. Set your expected returns. I have countless amount of investors that come into my office and they say, oh, okay, hey, I want to buy some rentals. And the first thing I always ask them is, well, what's the return that you're expecting on your cash? And typically, a lot of people don't have an answer. Real estate is no different than any other thing you invest in. You have a certain amount of capital, you invest it into that asset, and that asset pays you a certain return. Okay? Set your minimum return that you want your money to make with you on. If you can't get that return, then it's not worth buying. If you can't find any assets to get you that return, then your return's too high. So get the return set, and look at moving the money into the right kind of performing. You guys, having your cash sit around in a bank account making you a low yield during times of recession and inflation coming up, that's more detrimental than buying an asset right now. Review your current fix and flip projects. So as we're shut down for 2 weeks, this is the time now. If you're getting bids in on your projects that are higher, you need to get those bids down and work with people on getting the pricing down on those. You have 2 weeks to plan and organize your project. Get multiple bids, talk to vendors, see which vendors need work, rotate out guys. If you're calling a roofer and they have 10 backlogged roof jobs because of the delay, and you're calling them for the 11th job, the pricing is going to be high. So get yourself scheduled in now, price them out, and make sure that you're not wasting this time to really be able to focus on stabilizing your construction costs. Review your portfolio. What do you currently own? Is there an equity position, and is it paying you a return? A lot of investors make the mistake of going, well, I got a lot of equity. You guys, in times of recession, equity is the first thing that goes away. Cash flow, if you're buying the right kind of income producing assets, will not go away. If you're buying things that have an average rent of $13.50 a month to $14.50 a month, in times of recession or economic downturn, that's still affordable. People will still pay you that $13 to $14.50 a month. So you can kind of lock in your return now, rather than being stuck in an asset that maybe your current portfolio is paying you 4 to 5%, and you can get it to 8%. And the extra 3% in times of recession is more valuable than you'll ever realize. Cash reserves. Make sure that you keep a little bit of extra liquidity on you right now to cover any kind of situations that happen. Like for us, we're refinancing some cash outs, put cash reserves to pay for our rental if there's any kind of rental loss. On our fix and flip projects, we're making sure that we have a set amount of liquidity in the bank for overruns, delays, maybe extra holding times if we hit market and it takes a little bit longer. We're not going out and taking our cash and buying more stuff. We're keeping it in comfortable reserves. We're setting our reserve amount, and then looking at reinvest the rest. So why real estate holdings in times of recession, right? I think everybody knows a recession is coming in the next 12 to 24 months. I don't believe it's going to be nearly as bad as 2008. I think it's going to be more of a slowdown than a recession. But why real estate? The biggest advantage is it's a hedge against inflation. Right now, with rates being low and we could go into negative interest rates and the mass amount of government spending, we could see inflation and it could go up. That means if you're sitting with your money in your account, that money is going to be worth less money in 12 months. Okay, so real estate is a good hedge against inflation. Whether the pricing goes up or down, if your cash flow is locked in, it's a steady return. And we know that over a 10 to 12 year period, real estate always goes up and down. I think over the past 20 years of real estate, that's through two drops, the .com, drop, the 2008 financial drop. Real estate is averaging a return or appreciation rate of 3%. So you have a steady appreciation rate if you hang on to the asset for a while, and you can fix your. Bigger equity gains, limited funding could, and this is where you can really come in and increase your net worth and wealth pretty drastically and instantly. If there's tough I mean, the deal that we are getting in Fremont right now is, we're picking up an apartment building for $1.6 million or $1.65 million. They have to put $250,000 into stabilizing this building, getting it cosmetically ready to go. The building stabilized on a 5 cap, which is high for Fremont, or 5.5 cap, is worth $2.5 million. So that investor is walking into $600,000 in equity and wealth by buying this at the right time. Whereas 2 months ago, they probably would have paid $250,000 more for that. And so the cash flow was lower, and the instant wealth is also lower. So there's really time to kind of get those big equity gains. And you guys, those big equity gains is how you reposition your portfolio over the next 2 to 5 years. If you pick up $500,000 or $250,000 on an equity gain, you can 1031 exchange that and hyperactively build out your cash flow and expand your cash flow for the rest of your life. Steady investments. If you look at, target rents that are affordable for the masses. If you're buying stuff again that has target rents of $1,000 to $1,500, people will always be able to pay you that rent. Even in the 2008 crash, affordable rents really didn't move that much. Not affordable stuff came down more. But I mean, at the end of the day, people were paying $1,000 for a room at the beginning of the crash, and they were paying $1,000 at the end of the crash. Like the rents didn't move much. And then limited future inventory. One thing that we want to keep our eyes on, you guys, as there's an overcorrection, we're going to see a little bit of supply of investments. But then once the fear subsides, people are going to be rushing back to real estate to get a stable investment, especially if we're going into a recession. So that could really dry up the opportunities in about 6 months. So we have a really good 6-month window to kind of lock in some really good pricing on some things. And you guys, we're going to go over some general things on the industry, and then we're going to wrap up and start taking questions. I'm sorry, I'm definitely running long on this. So general real estate industry kind of tips for people. You guys, if you're a wholesaler, right now, you guys don't market to the masses. Find out what people want. Reach out to big buyers. You can reach out to us at Heaton Dainard. Reach out to your biggest clients, the seasoned investors that are still buying. Find out what they want to buy and go track that down. Fix and flip. Reevaluate your assets and pipeline, establish your buy box, your target area, reach out to your professionals, figure out where the high demand areas are with low inventory locations, and focus on those. Keep more reserves, plan for more liquidity. You guys, communicate with your lender partners. In times where the banking's a little bit off tilt right now, lenders are requiring more money down. Brokers, if you're a real estate broker, evaluate your current pipeline of business and expenses. If your pipeline's looking soft, you need to cut expenses immediately. That could be from cutting maybe marketing campaigns, or other types of expenses. Don't cut too much of your marketing. You do need to spend money on marketing to keep your pipeline full. Make necessary cuts in your business just across the board. That could be also switching your brokerage. Also talk to your brokerage, see if they'll work with you a little bit on their plans. I know for the month of April, we're waiving all desk fees for all our brokers at Heaton Dainard just to help out with the COVID-19. So talk to your brokerage, see if they'll work with you. If you need a low-cost place, come reach out to us. We can get you set up as well. Buy and hold. Communicate with your tenants. Figure, your current tenants. See what's going on with their situation. Get familiar with it. Work out plans with them before it comes into a no payment. And then also, if you can, refinance out some cash reserves for holding expenses for just a kind of a volatile, 90 to 120 days coming up. And then developers, I think we secured 11 building lots in the last 30 days. We're just getting better terms with sellers. If you're a wholesaler, you need good terms on dirt right now if you want to get them closed. So you guys, sorry I ran a little bit over. There's a lot of information to go over. So right now, we're slotted for an hour, but, I'm basically will stay on and answer everybody's questions as you need them. So if you have any question, just go ahead and stick it, type in the question in the box. I'll read off the question and try to get you an answer. So as they kind of come in, I'll answer them. So it's a good time, you guys, to ask as many questions as you want. All right, guys. Actually, I got a lot of questions I just noticed backlogged in. I'm going to start from the top. Holy smokes. All right, guys, we got a lot of questions. So, okay. Do all the questions need to be COVID related? No, they don't. Anything real estate related, go ahead and ask me the question on. Yes, someone asked if this is being recorded. It is being recorded. We will send it out probably today or tomorrow. We'll send it out. You can feel free to send it out anywhere. Also, it will be posted on our website. Here's a question that says, assume you plan to cover this, but would like to see your thoughts in 6 months, 12 months, the outlook for asset pricings for investments on multi-grade property. You guys, I think right now, like I talked about, we're going to see a sharp drop. There's a lot of opportunity in the next 3 months as, these big banks have pulled back some financing on 5 units and above, or they're, requiring a little bit more debt coverage ratio. That's going to limit what people are buying right now. So it's a really good time to pick up the multifamily for the next, 3 to 5 months, or I'd say from now to 5 months. We could see a sharp spike in pricing again once once that commercial financing loosens up again, it will go back the way it is. There was very, very low inventory and a high demand for good multifamily product. Okay, so this question is, Burr sounds like a great idea. Several hard money lenders have slowed and stopped financing. When do you think this will change? Also, do you anticipate more capital needed up front for hard money borrowers? And interest lending at this point. Interest funding is lending on our own internal deals. You guys, the reason that we are lending on our own internal deals is because we scrub every deal internally. We know it. We really do believe that it's a good asset that we're selling off. We're willing to share the risk with you guys by lending you the money and kind of working through the process. So we are funding. I don't see anybody going to low down payments right now, you guys. The reason down payments got dropped, hard money loans have always been at 20 to 25%, except for the last 3 years. And because the economy was ripping and roaring so quickly, lenders kind of started breaking their own rules at that point and allowing for less down payments. So you are going to see it go back to a normal down payment schedule where people do want that 25% down, right? Because hard money is always an asset backed loan, so we need to make sure the loan to value is there. I think you're going to see a lot of lenders be out of the market for a while. Again, there was that massive surge of bigger banks that were financing. I mean, you guys had, companies like Blackstone, Goldman Sachs, they're lending money in our market with the screen of a hard money lender. Most of the requirements were very strict, and they don't have a lot of appetite for risk. So, they pull back and they're probably going to stay out of it for a while, but it really does show you as an investor to make sure you partner with local real estate guys, because in the downtimes when you want to buy things, not at the peak times, especially for holdings. So you want to make sure that your lender's not going to bail on you as the market starts to get a little squirrely. But yes, we are lending at interest funding through assets that are procured by Heaton Dainard. So, feel free to reach out to us and kind of figure, we do have quite a bit of deal flow right now. And honestly, you guys, people are eating them up pretty quickly. I think we just sold a Bellevue condo to 5 different clients all wanted it. We just had to do first come, first serve. So, a good deal is a good deal, and people are willing to kind of, there's definitely a high demand still for investments. Scroll through the questions, guys. Sorry, guys, the question box is really small, so I'm trying to read through it. Okay, as a newer investor, what is the best way for me to mitigate risk at this time? So we talked about that a little bit during the presentation. So you guys, the best thing that you can do during this time is get pre-qualified for permanent financing. If you're looking at above 5 units, reach out to your commercial lenders and figure out what their ratios are. Because as long as you're buying right and you know what the permanent financing is, you can really hedge on how much cash you have to leave in these things. So what I would say, if you're a newer investor and you're looking at buy and hold, the best thing to look at right now are, cleaner single family rentals that you can get easy financing on with a built-in equity position. Right now, as the demand for flips drops down, that allows us, because BRRRR was hard to get because people are being so aggressive on their flips. If they're being less aggressive on the purchasing the flips, it's going to allow for more opportunities to kind of buy, renovate, and then refi out into the property. So I would say stick for low cash in deals with high returns. Stick for affordable rents because, we're in this weird situation right now because the layoffs, actually affordable rents are a little bit risky right now, which usually it's the opposite. The luxury rents come down, which we really haven't seen a ton of. But as the stimulus package gets put into the market, and as, once we start opening up these non-essential businesses again, the economy is going to get going back to work. So I would say low rent payment houses with some equity position that you can qualify and financing on, but definitely get financed or pre-approved financing. Are you seeing a lot of deals fall apart due to low appraisals and loss of income due to the are we seeing a lot of deals fall apart right now? No, we are not. We have only had 2 deals fall apart out of the 20 that or 18. So we had 19 pending. Now we have 17 pending. Or one was we did have a buyer just lose their job on a deal. Can't do much about that. They lost a ton in the stock market. They lost their job, and they're 50% of the job does not look like it's coming back very quickly because they are in the cruise line business. So that deal fell apart, and then we did have one person just kind of get cold feet because that can't happen. But other than that, it's a very low, at least on our side. We have seen some low appraisals. For us, we negotiated a waiver of appraisal on most of these multiple offer deals anyways. If you are working with a different broker, I would just talk to your broker about getting that contingency in there. And then we have gotten, I think, 90 or 80% of our appraisals back up to appraised price. So as long as you do your appraisal analysis right and you dispute it correctly, you typically can get it back up. Any thoughts on high-end condo markets? I would say the high-end condo market right now, if it was me personally and I was targeting a condo, it depends on what kind of high-end you're talking about. Like, if you're looking for like above $1 million resale in condos, I would be a little cautious in that right now. Not that saying I wouldn't buy it, that's not on the top of my personal buy box. But if I can pick it up at a 35% discount, I'll buy that thing. It all really kind of comes down to the discount. I would say in general, I'm shooting for a higher discount on luxury condos as a personal preference. Also, because if we do go in a recession, the luxury condo, I actually think what's going to happen is we're going to pump in a ton of money. We're going to get this COVID-19 under control. It's going to stabilize out the market for a little bit because of all the stimulus. And then slowly, as quarterly reports come out, we're going to start to go into a little bit of a decline. That's going to cause the higher end rent market to come down a little bit. And so, if you're keeping it as a buy and hold, I would think that there's a little bit safer investments out there right now. Another question pertaining to BRRRRs within the next 2 to 4 months. How much of a hit do you think appraisers are going to give the properties on value based on timing, if any? Both looking at recent sold comps and cap rates. Mostly focused on multifamily caps. So this question, you guys, BRRRR method really doesn't pertain to cap rates that much. It's, because if you're looking at cap rates, you're typically looking at 5 units and above. Okay. The appraised value doesn't really matter. It's about the debt income ratio at that point. So if you're buying if you're buying that multifamily building for $1 and it's worth $50, but the income won't justify a $1 loan amount, it only justifies a 50-cent amount on the income debt ratio, then you're only going to be able to get a loan for that 50 cents. So BRRRR doesn't really pertain to 5 units and above, in my opinion. It's more because you're refining on income, not appraisal. So on the BRRRRs over the next appraisal, sales are still sales in the market. And, if I buy a BRRRR property right now, I'm going to have plenty of data to justify that appraised price. The other thing is we didn't see a decline in housing or even pricing in the last month. We saw an increase. So again, right before we even had this shutdown go into effect, the day before, we were getting multiple offers on properties waiving all contingencies. So the buyer pool is still strong out there right now. And the good thing about a BRRRR is you're buying something with a discount because it needs a little repair. You're going to have to work on it for 4 to 8 weeks. And then when you go to refinance it, the market's going to be a little bit even more stable by then anyway. So I wouldn't be too worried about appraisals on there. If it's really a concern of yours or cash in is a major concern, maybe throw like a 5% contingency on your ARV to kind of tell you what kind of cash could be in. But I'm not too concerned about appraisals right now. Okay. Here's a longer question. It says 30-year SFR non-QM financing. When is that coming back? We have 10 of these rental loans now viewed within our business as a generational opportunity to our tenants nationwide for sober living homes. So the general question is, our tenants, you have nationwide sober living homes, and you're looking for non-QM financing. When is that coming back? I don't know exactly. I would say that that's going to be a little bit more conservative. You're going to want to reach out to a private banker on that. That's going to be I don't know a ton about those kind of financing. Says our tenants nationwide for sober living homes and high rent payments they pay. Also, if you know someone looking to place $1 million to $3 million. Okay. Yeah, you guys, we don't broker out money for, we're a real estate brokers that sells assets and provides investments. We don't broker investments for people or put together partnerships. Does anyone else have any more questions right now? So actually, you guys, there is a lot more questions, it looks like. Sorry, guys. This question box is extremely small, so I'm trying to. There we go. Okay, it says here's a question. Would you still feel comfortable starting a new construction project if you own lots free and clear? Construction financing is in place, but taking draws feels risky given the unknown effects of COVID. So in my opinion, if you already have financing in place, well, I mean, I would say this question is from DJ. DJ, what's the target demographic for what you're going to build, right? Because really, right now, if you're looking at building, you're probably 6 to 9 months out. I mean, the one good thing about that is you're going to be hitting the spring market, even if there is in times of issues. You're still going to be hitting that with a low demand. So I would say. My answer is yes and no. I think it's a good time to get projects going. If you wait for kind of the market to settle down, I think we're going to see the government really help the economy recover, especially in time of an election year, to kind of push things through. But I would want to know location and price point. The recorded version will be on our website. It says, when you talked about student housing or low risk attached, does this apply to university towns, several university closed by Spokane? Yes, you guys, on real estate, I'm a long-term thinker. So student housing, I'm thinking is a good investment because I do see our economy slowing down and not keeping the pace that it had before. We could be a little bit flat, if not down, over the next 2 to 5 years. This could be, a major turning point, which honestly we were due for regardless, right? It's just kind of starting that process. Student housing, yes, right now is not a good idea because, people aren't even at colleges, right? People are not living at the dorms. There's lots of things going on there. But, for me, I'll go buy a student housing building right now, knowing that it's ramping back up. I just build that into my pro forma. Or I'll buy an apartment building right now that may have tenants in it that may not be paying rent, because it really comes down to what's my discount. Buying a filled up apartment building and 50% of the people aren't paying rent because of COVID, all of that's going to do is get you a substantially better price. And I'll build that into my pro forma. So if I'm buying 4 units, they say they bring in $1,000 a month each, and 2 of them aren't paying rent, and I'm walking into a loss of $2,000 a month. Well, this is going to go on for 90 to 120 days. That's an exposure of $8,000 in loss for 120 days. If I'm picking up a $100,000 discount, then I really don't care about the $8,000. It's just part of the pro forma at that point. But student housing, once it, COVID-19, the fear of COVID-19 is going to, it is going to relax, right? It's going to be past, we are going to get past this. It will settle down, but then the economy is going to have issues going forward, right? It's going to be a little bit slow or a little bit flat, at least in my opinion. So buying student housing is a safe way to go because your tenants can still pay you. Says, what would you say if tenant calls and says they can't pay without a reason? Well, they have to give you a reason. But or actually, you know what? According to the ordinance that was passed, they actually don't need to give you a reason. It's kind of poorly written. That they're saying that if a tenant can't pay due to non-payment, so for whatever reason, if they have a non-payment, we're not allowed to evict them for 90 days. So it is kind of unfortunate. There has been some Supreme Court judges that have, or at least one has said that that's not, it's not legal, but it is what it is right now. And you guys, there are people sick and there are people that got laid off. As real estate investors, we do need to have some compassion about this. We don't want, me and Will have a ton of rental properties. And people are paying us rent right now. It's not a huge wave, but the people that aren't, we're trying to work it out with them, right? Like everybody's running into hard times, whether it's us as investors, but the people really having hard times right now are the people with low paying jobs. And so, try to do the right thing. If someone's not giving me a reason, I would just say, hey, well, can you at least shoot me straight? What's going on? Let's figure out how we can kind of make this better. Question, what is your strategy to get calls from current tenants that can't pay rent for a while? Right now, you guys just, you got to be patient with them. I would call an eviction attorney to see what paperwork you should kind of get in line. One thing, you guys, again, that we are doing is luckily for us, we kept a lot of, we didn't do the BRRRR strategy all the way through. We have a lot of equity in our properties. So we are refinancing out some reserves to kind of offset some of our rental loss income. Here's a question. What is your favorite property you invested in? Love the college rooms with common areas. What is the minimum ROI, cash on cash, and cap rate? So the favorite deal I've ever invested in was actually my Suncadia home. Honestly, I got to buy it. I got to use it for vacation. It cash flowed $20,000 a year. So I made money on it. I got a free place to stay. It was super relaxing. And then I did well when I sold it. I had a 25% equity gain. So that was definitely my favorite because I got to enjoy the actual asset. What is my minimum ROI, cash on cash return, and cap rate? That's hard to say because it depends on the location. My minimums change for how my minimum cash on cash return in a really good neighborhood of Seattle might be 6% to 7%. And then if I'm in more of an outskirts market, like let's say Eastern Washington or even parts of South Pierce, I might be looking for a 10 to 12% return. So it really depends on what the upside in the property. I say the lower the upside in the property, the higher the cash return. The higher the upside in the property, the lower return I'll take. Okay, Vancouver, Washington, $340,000 home price, which is a starter home, new construction. Okay, I think you're safe, in my opinion, DJ, and I don't have a crystal ball, but if you're going to build out a $340,000 house, new construction, if you really want to double check to see if it's safe, what will that house rent for? And if the rents are right in line with the mortgage cost, I would say get that house built, man. I mean, I at the end of the day, too, you're going to be taking out a new construction loan. I'm guessing if you own it outright, you can build out that for, depending on what you're building, let's say you're spending $200,000 on the build, you're getting a loan payment of 14, let's say you can't sell it, you refi out all your construction costs, you have no money in that deal. You'd be around $1,400 a month, or less on your mortgage payment, and you should be able to cash flow on a brand new stabilized asset. Okay, here's another question. It says, are you thinking 2 weeks is pretty close, or how long do you think we'll be shut down? You guys, I'm hoping that we're only shut down 2 weeks. Uh, you know, I think that the government's pushing to reopen the economy. You guys, if this stuff's not open in 12 weeks, we're gonna have a different problem on our hands. And I do think we got to kind of really pay attention to what's going on in New York and kind of, that's, it's just a terrible thing happening over there right now. And you guys, again, yeah, I know it's easy to get kind of overwhelmed, like, oh man, this sucks. All these things are going on. I might lose some money. But, at the end of the day, if you're healthy, you're winning. So just, keep that in mind. This will pass. Be fortunate that people aren't sick in your life or you're not sick and that things will move forward. I do think that we're going to see this. Seattle will keep, I think the shelter order will change after 2 weeks and things will loosen up as requests go. I don't think it's going to just turn back on, and so it's going to be more gradual. What my big hope is construction will get turned back on in 2 weeks, and then we should be looking pretty good. Here's another question. Is it possible to use a HELOC or credit card for that 20% down? You guys, I would say you can use a HELOC. I would highly recommend not to over leverage in unstable market conditions. If you're really trying to get that deal done and you're borrowing HELOC money, credit card money, and hard money on a single asset, credit card money is the most expensive hard money you can get. So, you're over leveraging the asset. I would be very cautious of that. Like, find out what kind of liquidity you have, buy those kind of assets. Be very, very careful about over leveraging right now. If I purchase with cash, do you advise to wait to see what happens with the virus or purchase now? I can say if you wait too long, you'll miss the boat. You guys, everybody's thinking that right now. Oh, when do I buy? I'm going to wait a little bit longer on the buy. And then you wait too long and it's gone, right? I just did that with Boeing this week. I was really pissed at myself because I'm like, I saw Boeing go down to $90. I'm like, that's a good deal. I should buy that. Just all logic said to buy the stock. And you guys, I'm not a stock person, but I was like, I think it will go down even cheaper. Now it's at 170, right? Like, you can wait this out too long. And, if you wait too long on the fix and flips, you're just going to be buying at the same return. Basically right now you can buy low get it stabilized and target, depending on the size of the project, like some of these big fixers right now, you can buy them and have them stabilized ready for the spring market. And they're still low demand. So, or high demand and low inventory. So, if you wait too long, you probably miss the boat. But, and there's nothing wrong with that. It might just be good for you to sit out for a while. And, but I would say, you guys, the best time to buy is when there's an overcorrection. 2 springs ago, when rates went up to in the 5s, went up in the high 4s, the market stalled out for a second. The buys I made during those next 2 months were the best buys I've made in 24 months. I mean, there's a property right now that's about ready to list. It was off that kind of session where honestly I probably picked up for $200,000 more than I should have because it was the right time to buy it. So timing is everything. If I have an off-market properties for Heaton Dainard to buy, should I reach out about buying the so if you have any off-market or investments you need placement with, reach out to Liam, Liam at HeatonDainard.com. He's my kind of go-to on that stuff. I would love to be sent more of your light fixer deals. What's the best way to get on those deals? So you guys visit our website, HeatonDainard.com. You can sign up for that, and then we'll get you kind of ready to go. And you guys, you do not need to attend the Investor 101 class right now to get on that list. Obviously, we're not holding classes right now. I have a flip that I'm about ready to put on the market. Should I still put on the market or turn to rental and refi? Emily, I think one question I would have is what kind of money are you currently sitting in? If it's hard money, try to refinance that into some softer money or a little bit cheaper rates. And then I would still put it on the market, you guys, as soon as the Northwest MLS can get going again and we're allowed to show properties, put it on. I was selling homes hours before the shutdown. Like, buyers are still there ready to buy right now. So I would definitely put it on the market. How much do you see in large banks pulling out of the loan funding affects the buying market? I think it doesn't affect our target flip buyers buying market because the big banks are still giving owner-occupied loans and for good seasoned people. On the investor product, I think we're going to get better deals. I mean, there was there was a lot of people jumping into fix and flips with very little money down. They could put 10% down and borrow the money cheap, which allowed a lot of competition. And I think it put a lot of people way over their head. So those people are not going to be around to really kind of bid things up. How do you sell a home during shelter in place? Do you sell it to a cash investor right now? I mean, there's not a whole lot you guys can do for homes on the market right now. I personally pulled off a lot of listings because what's the point? We're going to relist them again as soon as the shelter in place order is over. How do you calculate ARV on BRR projects right now? So how do we calculate the ARV? We get 3 sold comparables, an active and a pending, like an appraiser would. We just use recent data as well. One thing you can do too, because there was a spike in March in pricing, go back and get December comps. So that should put you at a pretty good value as well. Here's a question. I had a property going for sale on the market prior to the shutdown. Would you recommend to freeze the listing or remove it and then relist once it's down? For me, you guys, I took all my listings off and I'm just going to relist them. That would be my advice. The Northwest MLS has said that they're going to work on the days on market to freeze them. I don't know. You never know how long that could take to get figured out. Have you heard much potential layoffs, decrease in hiring for local tech companies outside Amazon due to loss of valuations of these companies? And that's a good point. As stocks are going down, and you guys, if you really look at it, like, yes, the stocks, like, let's grab Microsoft real quick. If we grab Microsoft stock, it has came down, but not detrimentally. Like, over the last month, the stock has gone from 175 to 150. Okay. Yes, that's not a good drop, but that's not like detrimental. Like they're going to be mass laying off people right now. A lot of that drop was an emotional drop regardless, and a lot of our businesses are good businesses with good, they have good cash on hand. So I don't really see them go anywhere. I have not heard of a ton of layoffs in those sectors at all. So, I mean, the tech businesses still look strong as far as I know. Someone's asking for gold advice. You guys, I don't sell gold. I did buy some, but I don't really feel comfortable giving advice on things that I don't know really, really well. And I should not be the person that you take that advice from. For a flipped home, $450,000 range, if I put on the market, should I put on the market, turn into rental repo? Okay, I think we already got that question. For Burr, it sounds like you mentioned 3 to 4 month turnarounds. Do you see in a 6-month seasoning period for appraisal based on refi, or are you able to do it sooner? So depending on structure, so Burr, I know you can still refi it quite right away. There is a cash out seasoning. So if you set your first loan up right, from the initial purchase, and then how you set up the structure of the loan, that's how you can burr out most of your capital, right? So it's really about how you set your first initial loan up in place. And you guys, we do work with a couple really good mortgage brokers. We don't get paid any marketing dollars from them. We just know they work really well with investors. So if you want to reach out to us, we can send you off their names. Jason Zhang at OnQ Financial is a really solid guy. I would reach out to him and he can get you set up with your financing. Another question is, do you think as soon as the shelter-in-place order is lifted, the market will pop back immediately? I do think the market will. I think things are going to sell well, right, as it kind of releases. If the shelter-in-place order stretches out for 2 months, I'd be more concerned. But if they allow homes to start getting shown in the next 2 to 3 weeks, I don't think it's going to have that much dramatic impact immediately on the market. I think I don't think we're going to see the bid-up frenzy that we saw in the last 30 days, but I do think things are going to sell. There's still buyers in the market. There's still inventory there. Do you think the forbearance thing will hurt your credit score? They said it's not going to hurt your credit score, but part of that is you guys got to stay ahead of it. Don't let it default and then go for the forbearance. Get a hold of your lender right away. Question, do you think foreclosures are going to increase? I don't, because of the delays in foreclosures. Not at least for this year. We could see a ramp up in foreclosures in 2021. Do you believe the frenzy? Do you believe this frenzy will last as unemployment heightens, stock market retains? I don't think that the frenzy is going to last at all. I think it's going to kind of slow things down in general. I think, that our buyer pool is going to remain strong. Laker, who asked the question, was very fortunate and something got bid up, I think, like 20% over list with our last one. I don't know if we're going to get that, but I do think we can evaluate these assets and get them sold for what we think we're going to sell them for. DJ Fry asked about starter homes. I think starter homes are a great thing to be building out right now. Like anything affordable, guys, that's going to help, as the government helps the economy rebound, they will sell well. It says, are there any lenders you could recommend for first position HELOCs for on free and clear investment properties? You guys, I'd reach out to Jason at OnQ Financial, Jason Zhang, and then you can reach out to our office. We can send you his info as well. He's very creative, knows how to get things done. Okay, I think that's the watch the news constantly. It makes us feel uncomfortable. Sometimes, guys, just shut the news off, right? Like at the end, what people are going to contract this disease. the testing results are just going to say there's more people that have it. Luckily in the U.S., I think we are pretty medically prepared, and we're one of the best countries to live in the whole world, and we're more prepared than most countries to deal with this. So our death rate, you got to look at the positives. People aren't dying as quickly as in other countries, but we all, for the sake of the nation, we all got to be patient, just kind of chip in, be a good human being, and this will pass. And I do think that we're going to be looking fine in the next 6 to 12 months. So I'm going to wrap this presentation up. We are going to have it posted to our website. You can feel free to send it out to everybody. Again, I thank everybody for their time, and everyone stay safe. And feel free to reach out to our office at Heaton Dainard if you have more questions, concerns, or any kind of assistance that you may need. So I'll wrap this up, and just everybody have a good weekend. Shut the news off. Try to enjoy your time.